Just before I start part two, which I already recorded when I was saying this, I was afraid from my interpretations of the charts that it appears that I'm too supportive of the dollar, especially relative to my title, Not Good Enough Greenback. I think that the charts don't necessarily tell a definitive tale yet on that we're disappointed in the dollar's progress. The thing that bothers me more is the very strong close in risk appetite this week. That always makes me uncomfortable if I'm trying to look for a further dollar revival. So that's really the key note here. And this is not good enough greenback. We have to see risk appetite lower, I would suspect, to get this dollar rally going further. So with that note, I'm going to stop here, and then you can look at the rest of the video. Thanks a lot. Okay, this is part two of the Friday, February 11th FX update. We'll get right back to where we were. We're on this very helpful Bloomberg function where we're looking at multiple curves at the same time. Again, the red is the emerging market index, and the yellow and white here are the white being BH Billiton stock and equity, which essentially tracks the copper price and some of those industrial metals, and the yellow being the S&P 500. And we see Aussie dollar, the green line has tended to follow those, and all four of these lines have tended to follow one another in the past. If you go further back, all of these correlated. The interesting thing being, of course, here that lately we've seen quite a sell-off in emerging markets, the red line coming off, while the S&P and the developed markets in general have continued higher. And the Aussie, which we see in green here, is sort of being tugged in between these two developments, as well as interest rate spreads pulling to the downside a bit as well. So very interesting to see this divergence, which one is the right way to go. Emerging markets have led in the past and are definitely a key risk appetite component for the Australian dollar. I think we need to see more convincing signs that China's having problems. But again, the Aussie dollar being pulled in two different directions, and I think we're getting into a pivotal area here in the coming month for the Aussie. Finally, and on that note, if we take a look at the the interest rate spreads here, we can see on the 2-year spreads they've tended to track each other very closely in the past and recent months, again because risk appetite has continued higher and higher and higher in developing markets, or developed markets, my apologies, while interest rate spreads have headed a bit lower, and this recent sell-off being divergence being from Stevens' negative comments for RBA forward expectations. Not closing the day convincingly to the downside on Aussie, however, as we'll get to in a second. Kiwi, again, etching new lows here. We've got the finance minister talking about a negative GDP report for Q4, but the market not listening so much, again, because of the commodity rally and because of risk appetite doing quite well outside of the emerging markets. That's a key point to follow. Dollar Canada did come off a tiny bit today, but the focus on the very strong Canada trade balance number had Canada on the bid again, and we saw that lower. Euro dollar pretty much following in line with relative interest rate moves. So now to the charts. Euro dollar, we teased just a couple pips below the range here. This reversal bar getting a good follow-up today. So we got our one-day confirmation on the bearish candlestick. We're still in a range here. We still need to see this critical zone taken out below 134, 25, 30, and possibly even the 55-day moving average, but at least taking out that first bit of support to get a bigger structural, more convincing argument to the downside on the euro dollar there. In dollar Swiss, found some resistance today ahead of this resistance line from back in earlier this year. Not anything that's destroying the trend here, but signs of a pause. Dollar yen a little bit less so. Interest rates heading back a bit higher again, possibly because of the Egypt situation and a bit of celebration of risk there. Who knows? But any time the interest rates are headed higher, it does put dollar yen under pressure to rally as well. Next key resistances are here and here, 84.50, 84.50, and then the 200-day moving average is slowly moving down towards 85. Cable, we did see it move down into this lower zone here, bouncing a bit into the close today. Saw it 25 pips higher just a couple of minutes ago, so the break here not fully convincing, but it is headed lower, and the dollar looking like it's trying to make a comeback versus sterling. In other crosses, and euro sterling didn't see the follow through, but we still have this very strong bar here suggesting the euro rally versus the sterling was just a bounce, and we're going to look for the next levels lower. Key for that will be next week's Bank of England inflation report and CPI, and how that all shapes out. Aussie dollar, a very we've seen the move here, the move back below the range, back below parity, and what we're seeing now is really just a small bounce. But again, you'd like to have seen it close closer to the lows for a more convincing sort of pickup in momentum. But understandable to see a bounce considering where we've gone on the S&P today. Looking at a couple of Fibbo levels, we could easily bounce to 10050 as a 382 bounce, even 101. So we need to close back above 101 to start worrying that this latest move, to worry that move is not indicative of further declines. As for now, it's still looking like it's a bit nervous to the downside. Again, though, the size of the bounce somewhat less desirable than you'd want for a turnaround, and also less good for the stronger dollar picture is the likes of emerging market equities, which, though they've been very weak lately, like we showed on that initial chart, today we're very strong, coming back quite strongly. This obviously off of the Egypt news. Maybe the emerging market effect of Egypt is much larger than the developed market effect, but we're seeing this reflected in any case in the likes of a dollar ZAR, where we saw the reversal intraday and close with a pretty interesting shooting star candlestick there. Going back just for one moment there on the euro dollar, it is nice to see on the weekly this original shooting star candlestick, which was very nice. We did see a rally intra-week. That's been rejected. So all these upper shadows here, still very nice suggestion that the pressure remains to the downside. We just keep insisting that we'd like to see the confirmation in the break and close below the range here, 134.30 to 50 area. Finally, dollar Canada. Wow, what a day for the Canadian dollar. It's looking good with risk appetite coming up. The crude oil has come off a bit, but that trade number, the trade number has really been a key issue that the Bank of Canada and Carney have talked about as being a hindrance to interest rates rising. I didn't see a massive move in interest rate expectations, but this is sort of the critical issue. So if we're seeing an improvement in trade numbers, which we are likely off of course, higher energy prices and a revival in the U.S. auto sector, this is an export-driven improvement, not a demand-driven import shrinkage that saw the strong numbers. So that's a Canada supportive data point. We did see this huge evening star reversal, only resulting in a very minor additional sell-off. So let's remember in any case the recent history of dollar Canada, which has been to never ever get anything going either way. Of course, the pressure, immediate pressure, still on the downside, but recent history having taught us that it's hard to get any momentum going in this chart. More momentum possibly in the likes of an Aussie CAD, which I think is a very interesting story and another way to play the relative merits of those two economies and an overvalued Australian dollar. I think the downside risks much bigger for Asia off of China's attempts to deal with its inflation and the possible popping of property bubbles all over the place. And of course, if you look, as I squeeze this together, you can look at a somewhat head and shoulders type formation there. Very nice. We mentioned this trade a couple, maybe last week, or it looked like we were getting a reversal either off of this stick or this stick, and it didn't really play out. I think it was after this one here. Saw some additional Aussie upside, but now some nice momentum coming into play here, and I think this is a very interesting chart going forward. Kiwi dollar. The recent market behavior was trying to train us to believe we're going to bounce again. If we look at the sell-offs here, none of them ended up resulting in a break of the range. Still prefer the downside, though, despite those recent patterns, simply due to the interest rate differential chart I showed you earlier. So those are the charts. Lots to look at this week. An interesting setup going into next week, where we look at FOMC minutes and a number of other data points. Keep in mind that you need to look at your calendar next week. And the dollar picture, the technical is still very supportive of the dollar in general. I kind of laughed at myself when I said, I think in the previous video I said this introduces a little bit of uncertainty. That's a laugh. There's always a lot of uncertainty in foreign exchange, as there is in any market. So let's see where this takes us. Let's see if we get a follow-up move next week in the dollar for better confirmation here. In the meantime, have a wonderful weekend. Stay careful out there, and we'll see you back Monday. Over and out.